What is up, everybody? Benny's dad here, back with another of our Chart With Me series. Today is June 19th. Happy Juneteenth. This one's, I don't know why. It's easy to say and it's hard to say at the same time. Juneteenth. Happy Juneteenth to everybody that celebrates. Hopefully your job gave you the day off, or at least is doing something to culturally signify today and its significance. So wanted to make a video today. The markets are obviously closed, but it's kind of a good time. We got through a lot of that, craziness, volatility last week with the WWDC and FOMC, CPI, all the iterations of different letters. So now we kind of have a clean run going through the rest of this quarter into the start of Q3 of the year. So just wanted to kind of walk through some bigger macro insights today. I still look at a couple of charts and give my opinions on our normal little watch list of tech stocks that we look at. And then kind of, give you some ideas on some other trades that I'm looking at. So without further ado, we'll get the music started. Let's get that going. And we will share screen here. So first, as always, just want to take a look at the overall market. And what I have pulled up today is the MES, which is the Micro E-mini S&P 500 futures contract, which is a lot to say. But the reason I have this pulled up is because futures trade 23 hours a day, 7 days a week with no holidays. So today is actually not an off day for the market, but you can see how we're really just range bound between these 10 points, right? So even though the futures market is technically open and can be traded, I'm sure there's some people that won and lost money in here, or gained and lost money, I should say. It's just one of those things where you don't want to be trading, even though you can, right? And this is kind of a larger theme I wanted to talk about today. And as we kind of go through the rest of, the charts and whatnot, and kind of my theme for the back half of the year is that less is more, right? So just because you can trade futures today in lieu of the normal market doesn't mean you should, right? So this morning, I used the extra time in my day to work out. I used the extra time in my day to read. I didn't even really look at charts this morning as I normally do and look for a trade to take before I start my normal 9 to 5. Like, I didn't do any of that stuff. I just had the time. It was like an off day. And really, I looked at the whole week kind of as like an off week. I did make one trade earlier this week that I'll go over. But for the most part, just kind of chilled all week. And so just wanted to touch base and talk about kind of like the less is more idea before we get into anything else. Now, backing out to the daily here, zoom in as much as possible. We're kind of nearing this level that I thought we'd get a reject at. Now, minus this trend line's kind of hold, right? So let's get this out of here. But I talked about this a while ago in terms of, hey, this downtrend that was formed in April, where can we see the market going, right? And we went straight up to this 168 point with almost no break. Like, we got a little bit of a pause, leading up to Memorial Day to close out the month, but bounced right off that 78 level, cruised back up to 100, and then up here. So Fibonacci's aren't like the end all be all, but this is a very strong case for using them in your overall trading to look at the totality of the market. Because we closed right at this 161.8 level, right? A 68% like of this. If this was 100% from top to bottom, right? 61.8% of that would have took us to this level, and we literally came up, touched it, and closed, right? Who knows if we're going to keep going? I read a report that said that in some of the European markets that were open, NVIDIA continued to trade high, and so, we could see a gap up and us continue and go to the next level. But I think, we're not going to retrace all the way back down to the 100 level, even though we're likely due for it. Yeah, the properties in here just so you can kind of see that on the screen. Like, I don't think we're going to retrace all the way down to this 53.34. We kind of did it here, like at the beginning of June. Came up, broke through, came back down, retested, and boom, we went all the way. And this is where that less is more strategy comes into play. Like, and I missed this. I'm not going to say like, oh, I know exactly what's going on. I think if I had been paying attention and believed in the lines a little bit more, then I would have taken this trade as, hey, we broke through, we retested this 100 and went, and then somewhere around the 11th or 12th, just got long and rode this up for 200 points, right? Now, within this, I probably could have went long here, got out when it pulled back. Obviously, this was a huge gap up over the weekend, right? Like, we don't really want to bank on that. But this is the less is more, right? I could have just done one trade and held it. Or as we came through these other levels here, just kind of trusted it and set a target for all the way up here. But I didn't. I missed it, right? I missed it. Hindsight's 2020. I can look back and say, oh, this would have been the perfect place. Oh, this would have been the perfect place. Oh, hey, like, let's draw a trend line here, right? And wait for it to get back to these levels. And it never came back and touched the trend line, right? Like, the technical analysis is not perfect. It's never perfect. It may look perfect when we draw our nice fibs and say, oh, wow, look at this. But even now, at this point, we still kind of don't know what the market's going to do. Are we going to dump back down and get a retrace because we're due for one? Or are we going to continue higher? And it looks the same, really, even if you zoom out on the weekly, right? Okay, we have a gap up here and go. Maybe we retrace down, right? Fill this gap and then go, which could happen, right? We have quad witch on Friday, which means the options, futures, all the contracts are rolling over to their next iteration. So we're going to see a lot of selling. We had the rebalancing going on in XLK, which is going to, in my estimation, lead to a purchasing of NVIDIA and a selling of Apple. How is that going to impact the market? And those two names in particular is yet to be seen. I would wonder if the magnitude would really be like huge, or if it would just be coming in the quarter, like as people kind of reshift to track that particular index fund, XLK's index fund. But all that's coming. So, like, in my eyes, since we got to this level, I think we bounce here, we get a retracement, and then I'd be looking to go long somewhere at this 54.38 and go from there. That's what the chart is telling me. So I'm just going to create an alert. I'm going to wait for it to get to my level and see how it reacts, right? If we do retrace and bounce and go, great. If I'm completely wrong about this, we break through this cleanly and then come back and retest this 55.67 and then go, I'm cool with that too. I'm prepared. You know what I mean? I'm prepared to see how either way. Right now, we're at a point, we're at a precipice, we're at a level. Let's see how the chart reacts to that level. Let's move on here in the interest of time. Going over to the charts of Apple. Apple's just been on an absolute tear. Talked about this on the last episode. Us kind of making this nice W right here, and what's going to happen, like 1, 2, third time we try to break through. This might have been like a fourth time. Same thing here though. You see this downtrend, right? This downtrend, the length of it was being reversed. We came up, we got very near that 161 level, and then we initiated a pullback. Switching over to the daily, we'll see a little bit more of the same. If we look here, right, this looks like, bang, it rejected that 220. Nice, strong psych level as well. Nice round number. Would have liked to see 215, but, you know, at the same time, just come back down, retest, go up, and like this trading like sideways but slightly higher. We could go higher, or we can come back down, get a retest of this trend line that was created on the hourly, and then go, right? Or we have this like overall trend line here, right? This is very like loosely drawn trend line, but based on this trend line, we could be retest and go. Just gotta kind of be ready. With Quad Witch, I personally have a downside bias. I'm not going to make any trades on Thursday or Friday. Why is it Monday? That's Sunday in my head because the market's closed. I'm not going to make any trades on Thursday or Friday. I'm going to wait, see if I can get something at the very, very tail end of Friday maybe, but I really don't want to hold over the weekend. And then Monday, kind of see how the market's reacting post Quad Witch, and then make a strategy. Less is more, right? Less is more. I'm not trying to force anything before I know that there's like this macro event looming in the air. So for Apple, right, like if they come back down, like 200 is going to be a strong level no matter what. I don't think we get below that. Could load some longs there. But it's like the 210, the 215 level is going to be important. We did close under 215 yesterday, right? And an overall down day, but we're kind of at a wash for the week. Like these two candles together, we're talking about a $1 change, 50-cent change. So we could see some downside pullback here, and then as we get to the end of June into that, beginning few days of the month, which are typically bullish, that's when we see the turnaround, right? So that's my strategy with Apple. Since Nvidia is kind of the other big name that's going on with that, we'll just take a look at that one first. We'll do the same thing here. Actually, let me zoom out because I hadn't drawn any fibs yet on this one. Oh my god, it froze on me. Since we haven't drawn any fibs, if we do the same kind of fib drawing here, time extensions, I want that. So if we do the same kind of fib, all right, this little downtrend, we crushed it. Look, this is perfect right here. This is exactly what I'm talking about. We can see happen, right? And we gapped up through this level, traded up higher, came back down, tested it, and boom, ripped right up to the very next level. And we had a little hezzy in there, a couple of red days. Nvidia's just been on an absolute tear. But with fibs, like this is kind of what you want to see for a continuation. So is Apple going to do that? Is the overall SPY going to do that? It's yet to be seen. Like we're kind of like this candle that's right underneath it, waiting to react. Nvidia is the perfect like bull example in all these, just because it is just been like on a tear. Maybe by zooming out, you can see it a little better. Boom, bounce, boom, and now we could see the same thing here, bounce to 132 and go. With Quad Witch, could see a lot of selling. Just be prepared. Just be prepared for all that stuff to happen, because you never really know. You just gotta have a plan and trade your plan. Let's take a look at Google. Looking at Google here. What is going on with my lines, dude? Sometimes you just got too much lines, too many lines, too many lines, too many lines. I got too many lines. So we got this trend line. All right, look at that. Old trend line. Might still hold up, right? I don't know where this fib is drawn from. It's likely on a older time frame. Yeah, 150 all the way down to 80. This looks like to be the old high all the way to the low on the weekly. Right? Oh, look at that. 100% exactly was the level. But we could get a third touch of this trend line. We could break through, come down. Right? We could come to fill this gap to 160. If we get under, we got a couple of gaps still. We got this island right here. But if we get under 170, I would assume that we're on our way back down to test the old highs. But we could bounce right at this trend line and boom, on our way up to 193. Either way works. If we break above this 180 level, 178.50, I would assume we'd go higher, maybe go higher, come down for a retest and go. Google's a little bit harder to predict. It's been like trading sideways, big jump up, trading sideways. But we'll continue to monitor it. I don't really love Google to like short swings, like month, 2 month swings for that reason, just because it seems to be like prepared to go sideways for a bit and then, make a good move. Like overall, this is a great move, but this is a year of action where for like 8 months, it's pretty much flat, or 6 months, it's pretty much flat. Big jump up, retrace. So back to basically where you started, a little higher, and then since March has just been on a really, really good run, which is kind of like when their Gemini really got going. So we'll see, like, this third touch of a trend line. Are we going to hold this and continue up? Like, consolidation, volume is like dying down. If you look right here, volume has kind of been dying down. So this is ready for a move, like this consolidation. Let's see if there's a breakout of this range to the upside. I'm an optimist. I would assume that we're breaking out to the upside. Lily, continuing to do what it does. Trade sideways, boom, jump up. Trade sideways, boom, jump up. I think we're in a period where we're going to trade sideways a bit. Once we get through that 900 level, which is really close, right? We're at freaking 895. Once we get to 900, we could get a little bit of a sell-off and then a trade sideways, which is pretty much what it did at 800, right? This is kind of the same. We had a couple of days of sell-off and then it just continued. So I would imagine at 900, we do the same. Lily, don't split. Just keep doing what you're doing, girl. You're looking good. You're looking good. Moving over to Microsoft. Now, Microsoft has been quietly not a part of all the big news that's been surrounding NVIDIA and Apple and XLK, Google, OpenAI, everything like that. Microsoft was quietly just chilling at the biggest market cap and then got passed up. Now there's the article circulating around that is going after like Cisco, when Cisco in 2000 passed up Microsoft as the largest market cap, and that kind of started the tech crash, right? The dot-com bubble bursted once Cisco passed up Microsoft for the #1 market cap spot. Does history repeat itself with NVIDIA passing up Microsoft? Quad witch, new quarter, who's to say? I very much doubt it. I don't think people are going to be as panicked as they were in 2000. I think investors are just, I hate to say this, but I think investors are smarter now than they were back then, and less likely to panic, more likely to just hold through bad news, just because it feels like we're numb to bad news, right? So for Microsoft, same thing as what's going on with Apple in the overall market. 450 is pretty strong psych level, right? This 458, 161 level, we could see that before we go down. Breakthrough and retrace could, if you're looking at coming back down to 430 before we go up, that'd be healthy for a pullback. But given the dynamics of where we're going, I don't think that pullback's going to come till like end of July into August as we get closer and closer to election season. Like the first debate, I believe, is scheduled for next week. I think I'll save that for another episode. But just keep in mind, as we get closer and closer to election and that uncertainty looms of who's going to be the next president, that's when you start going to introduce, I think, a lot of volatility to the market and be prepared for a pullback. So for Microsoft, if they retrace down to this 433, that's where I'd go long. You could also see, really, I'm waiting for 433 to do anything on this, or at least like a 10% pullback from here. This still looks bullish to me. These two candles, this looks bullish. Higher low, lower high, but higher low, right? The bars didn't even come back to 50% of the previous day's body. That's screams bullish to me. Look who finally decided to turn around. Palantir, right? Palantir, I talked about this, right? 1, 2, 3, like head and shoulders being taken down to this level, pretty much just bang 1, 2, 3 reject and on its way. We got over this little high here. I would love to see this continue to all-time highs at 28. I would love that, because that would be 100% retracement to previous all-time highs. Right? If we got we'd have to get all the way up to 30. That's their all-time high. But year high for sure at 28 would be nice. We get a test, might get a retest there. But as we head into the end of the month, like Palantir is another one where all these tech stocks are going to be very similar. So if you're in them already, great. Less is more. Stay in your trades. Don't get out of them. Quad Witch on Friday might present an opportunity where all of these kind of pull back. Like in a perfect world, Thursday, we gap up, we continue up, we hit all the different levels, the 161.8s that were drawn out on those bigger tech names that I was talking about. I doubt Google gets all the way up there, but Microsoft, Apple, they like cruise up there, right? And then Friday's Quadwitch, we get a sell-off, we get Confluence on the charts, we get a bunch of different reasons to sell, essentially. And in that, like, pullback is when we kind of load up to go long. So we're in position. So like if you're in cash, stay in cash, I think until Friday. If you want to make like a quick hit risky play on Thursday, by all means do so. I'm not recommending it. By all means, continue. Let's kind of go through the rest of these here. SMH is trading exactly how NVIDIA is going to be trading, right? These charts look identical. This box really bothers me. This trend line really bothers me because they just never came back. It never come back to test any of these. So as we're in all-time highs, damn, remember when I was like, oh, it might get through 250 and go? I was all the way back here. Whatever. So funny, I should have bought this dip, but hey, hindsight's 2020. If you wait for the pullback for Friday, similar to NVIDIA, right? SMH is just the ETF. It's a little, now it's even more expensive than NVIDIA was. You're better off, just hitching your wagon to NVIDIA than the ETF. The ETF was helpful because it was so much cheaper than shares of NVIDIA. But now that the ETF is more expensive, you might still like it for your long-term buy and holds, but you might not like it for, your shorter-term option swings plays, because this is what the chart looks like. The chart looks like exactly like NVIDIA, except it's twice as expensive. So all the contracts are twice as expensive. There's likely half as much volume because it's an ETF. So that's that. We'll go to Tesla. Tesla still trading in that range, still testing that. Look at this trend line. This trend line is freaking Hodor, dude. Look at this. Look at this. Loves it. Only broke through it once. Otherwise, completely respected it all the way down. We finally seem to break out of this consolidation to the upside, which is nice. We're on the opposite side of the trend line that seems to have held for a really long time. We made a higher low for the first time on the weekly or monthly, I think, in a long time. Right? Like if you look at this low and then this low, this might be easier to see on the monthly, but like we finally seem like this might have been the bottom in December, right? Investors are still down year to date, or technically they're up year to date, but like down from the highs of the year. And we may have seen a reversal and we're ready to go. I'm not trading this. I'm not trading this until we get a clean, until we get through 190. Then I'll start looking at some 210 calls for like 6 months out, 3 months out. If you want to buy them now and be early on this trend line break, great. But I kind of want to break through, retest, and then go. So I want to see this, what happened here. I need to see like more. I need to see a more higher break, come back down, hold, and then go. This little 1, 2, I need like a third pop up, pop down, and go, just to feel like this trend line is respected before I'm jumping in on Tesla. But I was glad to see we didn't even really break out of the range, right? Because we still have to get above this, right? Once like 200, once we're through 200, boom, we're gone. I think a lot of people are holding to sell at 200 though, so we'll see some action there. But Elon got his paycheck. He got headquarters moved. Happy days abound for Tesla shareholders and employees named Elon. So, if we continue to go to the upside, great. But I'm just I'm in a wait and hold. So everything I just went through, I'm basically waiting and holding. A lot of tech names. I think, the tech's hot right now. Tech is the hot industry. So it's just the one that I'm paying attention to the closest. Last name on the watch list to just go over very quickly is just Uber. It's funny because I was like, hey, if we hold this, I'll be looking to go long. We held this. I did not go long. But that's okay. You're not gonna do every single play that's in your book. We got a nice little, it looks like a reverse Nike sign, like a swoosh, you know what I mean? Got a swoosh here. Clearly a reversal to the upside. Clearly would have been nice to catch this gap and retest. Zoom in here, right? We gapped up, retested, went, we gapped again, seemed to have closed the gap. I'd be getting long here. I wouldn't mind. Like an Uber, let's just go look at the options real quick. I think an Uber January 2025 80. I don't like the spread on this. The spread's ugly. But dude, like if you wanted to do this, that's your play for the day, right? Your 80 calls, plenty of time, right? We filled this gap. We filled this gap, right? Filled this gap. All the gaps are filled. They're really tiny, but so this gap right here, filled it. This gap right here, filled it. This gap we never filled, but that's fine because we got a double gap. Basically filled this gap. We touched it and went. If we come back down to the 67, we got a little head and shoulders potentially on the hourly, so we could see some downside. But I think like we're strong to the upside. Wish we would have gotten earlier, but hey, who hasn't said that once or twice in their career? If you go with the 80 January calls, that's not bad. I'm not mad at that. That's a good play. So less is more, right? If you do get in now and want to hold till January, that's great. I think if you look at the overall macro picture as we head into Q3, I'll do another episode before Q3 officially starts, but as we head into Q3, like just be prepared to take profits. Take profits, load positions, wait for your plays, wait for your pullbacks. Investing in an all-time high, like if you're gonna swing, like short swing, fine. Play downside, sell puts, whatever. Do whatever your investment strategy calls for. But in my book, like based on the charts that we just went over, I think it would behoove most people to just kind of wait to get through Quadwitch, make some plays on either Monday or Tuesday. Now you might get a huge drawdown on Friday and then rebound back into Monday over the weekend. And so you might want to, set your watch for power hour on Friday, see what's down and what's rebounding, and upload into, your July plays. Scan the market, look at what looks good for you. Look outside of tech. If you believe a pullback is coming, you can look at oil. If energy, those two industries tend to do well when tech doesn't do well, right? You're looking at opposites. And just do whatever your plan calls for. I'll be back likely on Tuesday, and I'll share what I ended up doing over the last few days. But until then, let me know in the comments what your plan is for Quadwitch. If you had something good for Juneteenth going on, would love to hear about it. Thanks as always from Benny's dad, and we'll catch you soon.